Hello and welcome to Focus IR. I am John Hewman and I'm very pleased to be joined today by James Radford and Peter Malmstrom of the Quantum Financial Group, which is a technology incubator focused at the moment on fintech and security, readying itself for a stock market listing in the very near future. Welcome, Peter, and welcome, James.
Morning, John.
Good morning. Good morning. So there's a lot behind this company, so we're gonna try and get through it as quickly as we possibly can, but not scrimping on any of the detail because it's extremely interesting. Perhaps, guys, you give us a brief introduction to Quantum Financial. Tell us a bit about what it does, and tell us a bit about yourselves.
Okay, well, maybe if I take the talk stick to start with. Quantum was formed around 2016. My partner Floyd Woodrow and I really brought together interests in security and in fintech to form Quantum, which I suppose is defined externally as one of the UK's leading fintech and security incubators. What that in essence means is that we find what we think are good ideas that will make a real and practical difference to our target demographic and client base. We then populate those domains with really experienced people and allow those people to absolutely design products and services that directly fit our clients' needs. Quantum's been doing that quite successfully since 2016 and today has two companies in its fintech division, which is the biggest and I suppose the biggest driver to growth, which is Valopa, which James heads up, and Verve, which is a cashback and rewards business. On the other side, in security, we've got Valkyrie, very traditional security provider, and in terms of enhanced cyber capability, which of course is very topical, forensic control. So that's really the structure of the group.
And James, you are one of those experts heading up fintech, as Peter said. Tell us a bit about yourself and your background and what you're doing at Valopa.
My background in a nutshell, I did my early years at American Express and then traveled through some of the bigger financial institutions, Citigroup, HBOS into Lloyds, and then realized actually that my passion was for growth, product and growth. And so I ended up going into early fintechs. Aldermore Bank was probably one of the early fintechs. And then I was CEO of the UK business at Revolut for 3.5 years, and got chatting to Peter just in terms of the company, what it does, how it does it. And I think Peter hit the nail on the head there in terms of fintech often, in my experience, they build a solution and they look for a problem to solve. Actually, what Valopa have is a real world solution to expense management, international payments, where companies, and I remember in the good old days when I'd come back from an international trip, my pockets would be full of receipts from various currencies. And you'd spend the rest of the day, possibly 2 days, actually filling in forms and trying to work out how much it actually costs in pounds. Well, this is a real world solution that says, actually, while you're traveling, you can use multi-currency wallets, you can come home, it's all reconciled for you. The poor treasurer or expense manager at the company breathes a big sigh of relief. And it's that's attractive to fintech, which has got great technology behind it, but it's solving a real world problem. And so that's why I've surfed my way through the big organizations into what I would call the smaller organization with a real world problem that it's solving for proper customers.
And we'll come on to Valopa in more detail and where you see the potential, because it's huge, as you allude to. Peter, perhaps when we talk about the approach you take as an incubator and how the companies that are within the group operate, how do you go about building them up, letting them grow?
For sure. I mean, I think really if there are two things that Floyd and I have got right since inception, firstly, we have always employed people that are infinitely smarter than ourselves. Big tick in that box. Secondly, I think it's the structure of the group and Quantum that has really allowed the development and subsequently the really dynamic growth. We recognised very early on, to James's earlier point, we do not adhere to the field of dreams philosophy. We do not think that by building it, people will come. We are really careful when we look at real world solutions. And what we mean by that is, what does it actually mean to the customer? So we don't let developers just build things that they think are cool, that they think the customers will want. We consult with the customer demographic and say, what is it that what problems do you want to solve? How can we solve them? And then having developed, if you like, the MVP, we will then look at constant customer feedback to develop that product until it becomes best of breed. When it becomes best of breed, then you're obviously at the point where you've got ongoing development. I mean, Velopa is an exceptional example of that, but we really adhere to the same philosophy across the group. So the structure of Quantum isn't just a holding company. Quantum has its own capability, which it uses to assist those subsidiaries. We use centralized accounting, supply a lot of centralized high-level compliance, and more importantly, we take on and we administer the fundraising so that our subsidiary teams can really focus on what they've been brought on to do and what is actually their area of passion and focus, and that is scaling the business. They aren't crushed by constantly having to raise funding, which tends to suck your senior management away from doing what they do best, which is scaling a business. And of course, they're often crushed by heavy compliance and by accounting, all factors that Quantum lifts off them, allowing these dynamic subsidiary teams to really perfect the product and drive the growth.
Absolutely. And it's interesting that you mentioned funding, because that's something I wanted to ask you, because at the moment your funding position is extremely strong, as I say, you eye out this IPO in the year or so ahead.
Well, yeah, I mean, look, when you say funding strong, at the end of the day, growth of this kind of dynamism, I mean, we're on a near vertical growth curve, that takes funding. Obviously, we have our existing committed funding lines, but new projects are gravitating towards us almost on a daily basis. We've signed a new JV around Easy Wallet with the Easy Group. This is obviously a big project for us, as are multiple EMI licenses, to look at expanding not just our suite of products and services within our fintech division that we can offer to clients, but also the geographical footprint. We are looking at expanding into the Middle East with a GCC EMI capability that will give us a footprint across the whole of the Middle East. And we're looking to upgrade our existing IMTO license in Nigeria from the Central Bank of Nigeria, which will allow us to effectively passport into sub-Saharan Africa. So we've got big ambitions, both in terms of the float and in terms of increasing our operational footprint to include not just the UK, Europe, but the Middle East as a hub to go east and west, and then down into sub-Saharan Africa.
Yeah, absolutely. Big opportunity. James, perhaps you can tell us more about it and where you've got to with Velopa so far. Already some really big developments there. Perhaps talk us through those and what comes next.
Our key products are focused around expense management, as I said earlier, and international expense management, payments and foreign exchange. And so that's where the core of our business is. And then building from that, again, going back to let's engage with our customers and see what problems we're solving for them in terms of can we put new services on top of that? So, for example, an international wallet that allows your travelers not just to have their own spending limits, but a pooled spending limit across multiple currencies, where you don't have to have an administrator looking every day to see how much anyone's spent and how much they've got left. Actually being able to draw down from a pool internationally in any currency is a huge advantage to treasurers and administrators. The ability to expand internationally, one of the things we've seen from even small companies as they grow, their ability to grow internationally, and for us to be able to support them across Europe into EMEA and further afield by having these wallets is a huge advantage, both for us and for them. We really keep our eye on the three different groups that we manage, which is the shareholders. Are we building an investment case that's attractive to them? Our employees, are we building a culture that allows them to grow and expand? And also our customers. Do we keep layering on products and services that they're after? And so our roadmap, if you like, of customers is built with our customers. What would you like to see? But also from the competition. What's everyone else doing and what's in the marketplace? And then we prioritize. And so we're very pleased with our core offering, which is intuitive expense management, foreign exchange and international payments. But then underneath that, there's a roadmap that will keep us going right to the future.
And you've taken some interesting corporate actions recently, the acquisition of the American Express FX team. For instance, tell us a bit about that and how that helps accelerate the plans.
That's about seizing opportunity. So I've only been with Verlopa a short period. Actually, I've been with the company working with on and off for 3 months now, and joined in the last 2 weeks. However, in the past, when you see an organisation with such a great strength of brand as American Express looking to exit, a product or a service, actually to be able to bring that expertise of people and product in, enhance the product. And then go back into the market. It's a wonderful opportunity for us to A, have instant credibility, B, have expertise, as Peter said, hire great people, but C, then to be able to go back into the market and grow very quickly.
Yeah, indeed. There's another business within the fintech division as it stands at the moment, Verve. Perhaps you could tell us a bit about that. It's slightly different, but I think one of the strategies is that all of your businesses have some sort of synergistic existence with each other. Perhaps tell us a bit about Verve.
Yeah, for sure. I mean, synergy is important across the group. And I mean, you might think that security and fintech are quite disparate, but actually there is a strong convergence between fintech and security, because it follows that people in financial services want to ensure that that those financial services are secure. So Valkyrie provides an extra layer of security, deep web monitoring, and the like, to basically enhance the resilience of the fintech offering, particularly Verlopa. But Verve is an interesting one. Verve operates in open banking. Most of its current customers come from Starling and Monzo, which it's fully integrated with through API connectivity, open banking connectivity. And latterly, it's just gone live with Revolut. So what does Verve do? Verve has a platform that basically provides cashback and rewards. And its USP is that it can go right down to hyperlocal. So in other words, its software stack enables a single shop operator in the high street to log on to the Verve platform, self-enroll themselves, put offers up, and then those offers become available to the wider card base. And obviously the card base is, I think, the first white label that Verve did with Anna Money, that you've probably heard of, fast-growing fintech offering in the corporate sector, over 100,000 corporates. They've got about 70,000 users from Starling and about 30 or 40,000 that have come from Monzo. But of course, Revolut, with their huge client base, as they themselves are pivoting away from cashback and rewards per se to the new Revolut coin, a different approach to rewards does create an opportunity for the more traditional cashback, very tangible, physical cash repaid onto the card, which is very attractive, in terms of tokenization, which comes with some complexity and maybe not as fungible as we all know with air miles. Trying to use air miles in the height of the season, you get, across the channel for 1 million air miles. Whereas off-peak, they're obviously much more valuable. Whereas physical cashback is very meaningful to our clients, and that's really where Verve operate. And it's a very nice additional bolt-on, if you like, to the core Verlopa offering. But of course, being an independent company, it can service the needs of these other major players that have got very big card user bases.
Yeah, indeed. And I already saying the numbers there are looking pretty good. That the growth's already been quite rapid. Perhaps talk through, how this is manifesting itself in terms of growth across the fintech side of things.
Well, I mean, obviously the key driver is Verlopa, because I think clearly the markets also see and our underlying modelling suggests that Verlopa is leading the charge. But there's some very scalable and interesting opportunities surrounding Verve as well. I mean, Verve is true frictionless fintech, and what we mean by that is that obviously having built the tech stack, it can infinitely scale without any significant increase in its overhead, because it's basically technology driven. Velopa is not true frictionless fintech. And why? It's because we combine that cutting edge technology with old school customer service. We believe that this is the element that is missing in the current explosion to move towards more digital fintech offering. We do not believe that you can adequately service a B2B client base using AI. We don't think it's a mature enough technology. Clearly, it helps accelerate some of the areas in customer service, but true customer service comes people to people. So we have got a USP, which is to combine that cutting edge technology, which reduces the amount of, if you like, exceptions, but then to deal with the exceptions with old school UK-based customer service. And that really is the space that we operate in. The UK banks don't want to deliver high levels of service to the SME community, but do want to charge them huge amounts of money for delivering that lack of service. Their customer service is very poor, whereas on the other side, fintechs tend to want to go for massive volume and to try and handle a one-size-fits-all approach using AI customer service. We operate in that mid-space where we believe that we can identify those customers that can most benefit from our products and services, and then combine that killer tech with really exceptional levels of customer service. So that is, if you like, the bubble of opportunity that we exist in, which is why I think we're seeing such dynamic growth in that area.
Just quickly on that, just to put some context with Peter, I mean, our payment spend is up 4 times year on year. International payments is 3.5 times up. Our Q4 card usage was up 75%, and in Q4 last year our payments doubled. So we really are on a strong trajectory. It's about how do you keep that momentum. That's my focus for the next 6-9 months.
Yeah, absolutely. I mean, you preempted my question. You know, these fintech, very competitive space. How do you differentiate? And I think you've you answered that pretty comprehensively.
It goes back to the modelling that we talked about, what the structure of quantum that is providing this. If you like, having found the ideas and made sure that they were relevant to the target demographic, we then obviously develop the product. But then you get to that inflection point. And at the inflection point, you know you've got a killer product. You've got a client base that are giving you really valuable feedback, and therefore you're fine-tuning your product. And then you're going into this dynamic, very fast growth phase. And that is where we are fortunate to be able to attract people like James that are coming to mature organizations with strong capabilities, with a proven product. And then it's just a case of scaling to look at that. Well, exit route, yes, though we tend not to stock check our professional advisors to say the float for quantum is not an exit. It is just a stepping stone to further growth. And I think that is probably what's fueled the interest from the London Stock Exchange. The size of the potential float that quantum might achieve means that they're looking and asking us to look at main board London rather than on any of them on AIM or in any of the smaller markets. So main board listing is our focus. And really, I think the size and trajectory that we could achieve beyond just the float would be a stepping stone to further growth rather than what people often refer to it as an exit. Fungibility in the stock is the key for us, which will then help fuel our future growth. It isn't the end point, though obviously our shareholders are very keen for us to actually get to that float point because, of course, it opens up options for everybody in terms of the fungibility and part of the portfolio for further growth.
Yeah, absolutely. And it's exactly the kind of tech company that I think London desperately needs. There was something that I read that I thought was absolutely fascinating, that you're aiming to coincide the flotation with profitability. And I think that's a key fact in why it's such an attractive proposition. Perhaps you could talk us through what the numbers look like, where you're going to be by the time flotation comes, and I say that financial trajectory.
Well, I mean, I think the financial trajectory has been spoken to quite well with a report that was recently, report and valuation that was recently put out, which was, I think, is available on the London Stock Exchange website. But it suggests that the group is valued today at around just over the 400 million mark. I mean, we felt that was quite flattering, but obviously I think really underlines the strength and the interest and the, if you like, the P&Es available in this space. we were told that it is possible for companies, particularly fintech companies, to float whilst they're still scaling towards break even. But I think we as a management team are much more old school in our approach. And that is that if you're going to go to market with a de-risked proposition. What that means is a good spread across stable companies that have been operating for a number of years and come together to give that collective growth, that spread of risk. But of course, the biggest single factor is that you want to go to market, in our case, with no external debt, with no VCs to placate, with near vertical growth, and of course profitable, so that investors coming in can see your trajectory, can see the opportunity, because of course it's not just the float price, it's about where the stock will go from that initial float. And of course, we really want to ensure that our growth is not just endpoint float. Our growth trajectory and our planning goes beyond the float, maybe over the next 5 years, where Quantum could be quite a substantial UK corporate with a truly global reach, and obviously a significant market cap to go with it. Those are our 5-year objective plans, and the break even, which is looking at probably middle of next year, just ahead of the float, which we're planning for Q3 2026, really is all part of the roadmap and milestones to achieve those aims.
Yes, indeed. We barely talked about security, which is obviously another substantial component of the existing business, and there are other opportunities beyond that, which if listeners download that report, you can read about. Perhaps, Peter, just talk us through quickly security and other sort of adjacent areas that you're looking at the moment.
Yeah, well, I mean, I think cybersecurity is clearly a key area. It's very topical, but also if you look at Valopa's core demographic and their marketplace, it's SMEs. So, of course, it follows that if we were able to secure a UK government-approved cyber, in this case, Cyber Essentials and Cyber Essentials Plus as a product, it would make sense that we could potentially bolt that product into the Valopa platform, in essence, providing an increased capability. Because let's face it, as a stressed and overworked CEO, CFO, or financial director, you are probably aware that that you need all of these services in terms of financial services, but you're also probably aware that you're underperforming in terms of cyber. So to be able to just pick a product that's manageable, affordable, makes a really big impact into your vulnerabilities. And I mean, the statistics are quite incredible. Corporates that take on Cyber Essentials and Cyber Essentials Plus are massively reduced in terms of the potential for them to be attacked in a meaningful way. So you can never mitigate risk to zero, but this is a product that is very easy to use. And of course, the synergies between that cyber product and our core client base, whether it's in the security or in the fintech world, tend to be SMEs, and therefore the convergence of the two and being able to cross-market makes perfect sense. But I suppose it's our history that has driven us to the point where we have these two clear divisions. Moving forward, we're looking at independent development, but synergy and if you like, the growth and force multipliers where they come about. And forensic control, directly relevant to Valopa's client base. So cross-marketing there is a no-brainer.
Yeah, indeed. And last word for you, James. Fintech's massive growth opportunity for the UK in particular, but arguably sort of somewhat underrepresented on the stock market in a pure sense. Perhaps tell us, what one message for investors, what makes Valopa so special, and why investors should be paying attention.
Fintech isn't something new. Fintech is just technology to solve old problems. And what we've done is we've taken the old problem of expense management, international payment, and foreign exchange, and we've built a solution, and we're just going to continue to do it brilliantly. And if you focus on your customers, your shareholders, and your employees, making sure from a shareholder perspective, we focused on the story of growth and how we're going to benefit them. Customers, making sure we are solving those real world problems, making sure we're not using immature AI, but we've got someone on the end of the phone if you need them. And from an employee perspective, that make this a great place to continue to work. When you put those three things together, actually, you've got a great value story for shareholders, employees, and customers.
And it's a fantastically interesting company. Peter, James, thank you so much for talking through Quantum Financial Holdings, and very much looking forward to seeing it come to market. Thank you.